So we're going to wrap up module 1 with this final video, trying to tie in the last of the financial statements, and then talk a little bit more. We want to close this out on the idea of accounting in context. And so in this case, our next financial statement up is the income statement, and it can get really busy. So this is very busy, okay? But what are you interested in terms of making a decision? Well, I obviously want to know about my revenue or my sales, okay? Obviously a big deal. Next thing is a thing called cost of sales. You'll hear some people talk about this cost of goods sold. I would anticipate that in this case, this is going to be the material, the food, the beverages, all of that kind of stuff that goes through this restaurant. I think that's going to be the cost of the services that they provide. Now, in this industry, labor is kind of its own thing, okay? And so it's such an important component of what they do. They show it as an independent line item because they think it's significant enough for users to find the information helpful. Then they lump everything else in here into other general or other costs and general administrative expenses. That's just one of those everything else kind of items. They bring out depreciation separately because depreciation, and we'll talk about this more in a little bit, is a non-cash item. It reflects the amount of kind of wear and tear on your fixed assets that gets consumed in the business. It's an approximation of the value that they're getting, that you're using in terms of your assets. It's also thought of as an amount that you kind of set up as a reserve, if you will, to replace assets that you have, because as you continue to use them, you depreciate them, and at some point you're going to have to replace them. So if I can retain this amount, if I can retain that amount and continue to save it in my retained earnings, then as a result, I'll have the internal funding to go out and replace the equipment. Then down in here, you see an income from operations. A lot of people think of that as a really important number because that's the one that tends to be more recurring. It's more reliable. It doesn't have as many unusual kinds of things in it. You know, if I'm comparing income from operations year over year, month over month, it's less likely to have some unusual kind of things in there. What else have we got? We got the interest, and we've got income tax. Okay, and so this number, okay, is pretty close to what we'd call EBIT, income before interest and tax. And this net income is always the big finish. Okay, so that's the income statement. The next thing is this cash flow statement, and this thing can get messy. But one of the things that you need to focus on is there's really only 3 kinds of business activities. And this is going to be important because it also gets us back to this idea of economic transactions or economic events. Sorry about that. What economic events occur and how am I going to reflect those in my financials? So they talk about getting cash from operations. You have cash from, you're going to use cash when you're investing, and you're going to get cash from financing. And so when you talk about operating activities, net income always starts it. What cash did I generate from my day-to-day operations? I'm always going to add back this depreciation number, depreciation, amortization, because while it's an expense in here as part of my income, it didn't take any cash. So that's why I add that back. And then you've got other stuff that goes in here, and that's the cash generated from my day-to-day operations. I'm going to use it, okay, by investing in things. So if I buy more property and equipment, okay, if I acquire a company, all of those things are investing activities. Finally, I can finance some of this stuff different ways. I can borrow a long-term debt, but then I ultimately have to repay it. So they keep those two debt transactions together. We could pay some dividends and we could buy back some treasury stock. Ultimately, you've got beginning cash, you've got the information that happened from these three. All of those get added together and they tell you the net change in cash and cash equivalents. In this case, they've got some foreign currency transactions. That is another pretty esoteric accounting thing. I'm not going to drag you through that piece. Ultimately, you wind up with ending cash. The piece of this is always the reminder, reconcile your bank account. Always reconcile your bank account because so many things can go wrong and you tend to spot it all as you're going through that income statement. And so at this point, I want to talk about accounting in context. And some of you may remember this from going to the pediatrician's office. There was this thing called Highlights, this magazine called Highlights. Even an old person like me remembers this, okay? And in it, there were these hidden pictures or hidden items inside of this picture. And so in this case, they give you clues. Can you find all of these hidden things? So for example, there's the moon right there in the tire. Can you find the hidden items in here? Where are the hidden shapes? Well, that's like accounting. That's like accounting. Because here is the bar area of a classic Cheesecake Factory. So where is the hidden accounting? Where is the hidden accounting? Well, right away, I know I've got accounting right here. Okay, that's a very expensive inventory. So bar inventory is something that every restaurant looks at because it's easy to lose inventory, shall we say that. Um, the euphemism is that inventory will walk out the door. Yeah, people will take it, but don't forget over pour and under pour in here. Don't forget then also the efficiency of how this runs. Okay, how many touches do I have on a drink? How efficient can my bartenders be? How quickly can we get these drinks finished? When I look at these tables, it's an accounting thing. Okay, so that's going to be equipment. But don't forget, it's also a strategic thing because they've made a decision. In this case, they've got a 4-top table, but it's a high top. Not everybody can use a high top. Okay, so they've made this choice. They've made a choice of the mix between folks that will sit at these tables and folks that would prefer to sit at a booth. They've made these tables movable depending on whether or not they had a higher number of folks that wanted to be at a table or not. So they've determined, I believe, that each of those is a 2-top. And so they can accommodate kind of the smallest group or one where that could take the entire space. Where else is the accounting? Well, here's the cost of creating the facility, the ambiance for a Cheesecake Factory. Where else is some of the accounting? Well, I would say that accounting is down here on this floor because if you've ever been in there, that leasehold, that cost of creating the floor is going to be an asset. However, the risk of having someone slip on a slippery floor, that winds up, and you remember we talked about those contingencies? That's a lawsuit waiting to happen. Anyway, with that, you can find the hidden accounting, just like you can find the hidden crescent moon inside of an old highlights puzzle. So with that, I think I'm done with the overview for Module 1. I hope you found it interesting. Don't worry, I've got some accounting problems for you to work. And so always remember, I'm available for questions. So with that, you guys take care. Thanks for sitting through those videos, and we will see you a little bit later. Take care, everybody.